Why have rates moved so dramatically? And what drives mortgage rate movements? The answers are complex, but the moves make more sense when you learn which factors drive mortgage rates and which don't. Here's a quick crash course that could save you money on a new mortgage or refinance. The Federal Reserve doesn't set mortgage rates, but the central bank's decisions definitely influence mortgage rates. As the coronavirus pandemic hammered the U.S. economy in 2020, the Fed said it would keep rates near zero for the foreseeable future, and mortgage rates plunged. As the Fed began hiking rates in 2022, mortgage rates rose in anticipation of those moves from the central bank. Mortgage rate levels are priced above of the 10-year U.S. Treasury, considered by investors to be a risk-free investment. The spread in pricing between mortgage rates and the 10-year Treasury reflects the risk that investors bear for holding these bonds. Another factor is the economy. What happens in the economy and how those events affect investors' confidence influences mortgage pricing. Good and bad economic news have a reverse impact on the direction of mortgage rates. I know, confusing. Bad economic news is often good news for mortgage rates. When the concern about the economy is high, investors gravitate towards safe haven investments like treasury bonds and mortgage bonds, pushing those bonds higher, but the yields on those bonds lower. Good economic news increases the consumer confidence in spending. Robust GDP growth and a solid stock market tend to push mortgage rates higher. We have been hearing a ton about inflation. Inflation is the increase in the pricing of goods and services over time, and it's an important benchmark when measuring economic growth. Rising inflation limits consumers' purchasing power, and that's a consideration lenders make when setting mortgage rates. Lenders have to adjust mortgage rates to a level that makes up for eroded purchasing power when inflation rises too quickly. After all, lenders still need to make a dime, and that becomes more difficult when consumers' buying power is diminished. The bottom line is this: mortgage rates are always a moving target. They change hourly, daily, weekly, sometimes minutes, and are difficult to time perfectly. If you're weighing a home purchase or refinance, give me a call so we can discuss mortgage rates and find out when you should lock your loan.